Hello and welcome to Daily News Simplified, an analysis of the Hindu newspaper from UPSC perspective. Today we will discuss the Delhi edition of the Hindu newspaper dated 20th December 2019. And the articles that we will discuss today are displayed on your screen. So let us start our discussion. Now this article on page number 11 is related to the strategic sale of the Bharat Petroleum Corporation Limited. And you might be knowing that the government has recently approved the sale of its complete stake in the Bharat Petroleum Corporation Limited, which is a Maharatna company. So in this article, we will try to understand what is the purpose of categorization of PSUs into Miniratna, Maharatna, Navaratna, etc. And after that, we will look at what is the criteria for defining or granting the status of Maharatna on these PSUs. Further, we will try and understand how does the Maharatna status provide certain autonomy to the functioning of the PSUs. And finally, we will understand the arguments that have been raised in this article against the disinvestment of the BPCL or the strategic sale of the Bharat Petroleum Corporation Limited. So this will become important for us from General Studies Paper 3 under the mains examination under the topic Economic Development. Now this strategic sale of BPCL is an ongoing issue and was covered in detail in the Daily News Simplified of 22nd November 2019. And in this discussion, the various aspects of the strategic disinvestment were discussed. And the aspects that were discussed included the term or the meaning of the strategic disinvestment. What are the pros and cons of such strategic disinvestment? So before watching this video, you should go and watch the DNS of 22nd November 2019 to understand the various aspects of the strategic investment. After this, let us take up why is the categorization of PSUs into Maharatna, Miniratna and Navaratna required. Now public sector companies or the public sector units are categorized into three kinds, and these are the Miniratnas, the Navaratnas and the Maharatnas. Now this subcategorization within the PSUs has been provided for awarding greater financial autonomy to certain PSUs. And this autonomy is provided because the government wants these PSUs to have a competitive advantage, and also the government intends to enable these PSUs to become global giants. And accordingly, the government has been according the status of Miniratna, Navaratna and Maharatna in this order. Now in this background, the Maharatna companies have the highest order of autonomy in their functioning. And as such, these companies are capable of becoming global giants. So let us understand what is the criteria followed for granting of the Maharatna status. The first criteria is that the company should already have a Navaratna status. So the sequence of the status is that first the PSU is provided Miniratna status, then it is provided Navaratna status, and after that it is provided the Maharatna status. So for a PSU to get Maharatna status, it should already have the Navaratna status. Secondly, it should be listed on the Indian Stock Exchange with minimum prescribed public shareholding under the SEBI regulations. So these PSUs have to comply with this norm of the SEBI's or the Securities and Exchange Board of India. Now besides this, there are three criteria. First is the criteria of average annual turnover. Second is the criteria of average annual net worth of the PSU. And the third criteria is that of annual net profit that is earned by these PSUs. And accordingly, these three criteria can be important for us from preliminary examination. So the three criteria that are followed are annual turnover, annual net worth and annual net profit. And accordingly, average annual turnover of more than rupees 25,000 crore during the last 3 years is one of the criteria. Second criteria is the annual net worth of more than rupees 15,000 crore during the last 3 years. And the third criteria for providing the Maharatna status is that average annual net profit after taxation of more than rupees 5,000 crore should be there, and that should be during the last 3 years. So annual net profit should be about rupees 5,000 crores or more in the last 3 years. And further, this entity should have significant global presence or international operations. So these are the criteria that are followed for granting of Maharatna status by the Government of India. Now, as the goal of the government in granting the Maharatna status is that such PSUs should become global giants, it provides enhanced powers to the functioning of these PSUs. And accordingly, a Maharatna status PSU can invest 15% of its net worth in a single project for establishing a new venture, or also it can undertake an acquisition activity with a cap of rupees 5,000 crores without any permission from the government. So there is no bureaucratic hurdle in taking its own decision under this criteria. That is, they can invest up to 15% of their net worth in any single project for establishment of new venture, and they can make an acquisition activity up to rupees 5,000 crores. And all this can be done without any permission of the Government of India. However, in case of other PSUs, they have to take the permission of the Government of India before investing in a new venture or while making an acquisition activity. Further, these PSUs are provided autonomy in making equity investment to establish financial joint ventures and wholly owned subsidiaries in India or abroad. So second benefit of providing the Maharatna status is that these companies can invest and create joint ventures in both India as well as abroad. So all these are aimed at empowering these Maharatna PSUs to become global giants. So in this background, let us understand the arguments that have been raised in this article against government exiting the Maharatna companies or governments diluting their stake in these Maharatna companies. Now, the first issue that has been raised by the authors regarding the privatization of the Bharat Petroleum Corporation Limited is that this decision of the government does not reflect the long-term agenda of privatization of the government. So in this regard, let us look at what was the original idea of the government regarding the disinvestment of profit-making PSUs. Now here you should note that earlier all the public sector units were under the hold of government, and the government had 100% stakes in these public sector enterprises or public sector units. Now, after India embraced the liberalization, privatization and globalization in the year 1991, government has been continuously diluting its stake in the public sector units. Now, in this background, government started with what is known as partial disinvestment. And this means that the government did not dilute all the stake that it had in the profit-making PSUs. So for example, if government had control over a PSU of 100%, it diluted its stake and reduced it to 90%. And that 10% was sold to private entities. And as such, it is known as the partial disinvestment of profit-making PSUs. Now what is happening with BPCL is the strategic sale of BPCL. Now strategic sale means that the government is diluting all its stakes in this public sector enterprise. That is, now it will be completely in the hands of private sector and the government will have no control over the public sector enterprises functioning. Now what was the main purpose of objective of this partial disinvestment of the PSUs? So the objective were two. First was that by doing this, the government would free up resources which could then be invested into loss-making PSUs with potential for future profits. So for example, if there was a public sector enterprise that was not profit-making, however, this public sector enterprise had the potential of being profitable in the future, the government would have invested in that public sector enterprise by the resource which it had raised through this partial disinvestment. Second purpose of such partial disinvestment was that it provided private shareholders also a say in the public sector enterprises. So for example, if the government diluted its share and now it only had 90% stake and the private sector had 10% stake in such public sector enterprises, it would have ensured accountability and the monitoring of the function of these PSUs. So this was the original intent of partial disinvestment. However, presently what the government is doing is the strategic sale of the BPCL, which is profitable at the present moment. So it is argued that such kind of privatization of profit-making PSUs like the BPCL does not reflect the long-term agenda of privatization or partial disinvestment of the Government of India. And such a decision has been driven by revenue shortfalls for the government. Now we note that various issues have been raised regarding shortfalls in the GST revenues for the government. And this reflects that the government is trying to make up for these revenue shortfalls by raising money through the disinvestment of the privatization of profit-making PSUs like the BPCL. Now, another argument in favor of the privatization of the public sector enterprises was that it increases the efficiency of functioning of these public sector enterprises. And it is often said that the public sector enterprises have a loss-making tendency. And it is often said that the private sector is more efficient in its functioning as compared to the public sector. Now, why is there a lack of efficiency in the public sector enterprises? And why is there a favor of privatization of such PSUs? So it is often said that the public sector enterprises are suffering from political interference, and also such government stake discourages the competition for these public sector enterprises. And the second argument is that the private sector enterprises are always profit making. However, as against these arguments, it has been argued that the privatization does not necessarily lead to improvement in the profits and also increase in efficiency. And this has been witnessed in two important sectors of Indian economy. First is the telecom sector and second is the aviation sector. Now, if you look at the telecom sector, all the companies presently are debt-ridden and are barely surviving. And that is because of the intense competition between the companies in the telecom sector. And secondly, the aviation sector is also suffering and airlines are not able to make profits. And many of the airlines like the Jet Airways have closed recently. So the argument that the private sector companies work more efficiently and have a tendency of profit making is flawed because of these experiences of the Indian economy related to telecom sector and the aviation sector. Further, the argument in favor of privatization is that these companies focus more on profit and they are always profit making. Now, why is such an argument forwarded in the first place? So it is often said that the private sector companies operate in the market scenario, and as such they have to participate in the competition in the market. And accordingly, the loss-making firms close and disappear. However, it is said that even when the PSUs or the public sector enterprises are loss-making, they survive due to the government backing. And as such, these public sector enterprises are not closed. However, if you look at the functioning of some of the public sector enterprises, you will find that these companies are the market leaders and are highly profitable companies. So for example, in this case, if you look at BPCL, it is the market leader in the oil corporations and also it is a highly profitable company. So that is why arguments have been raised against the privatization of such a profit-making public sector enterprises. So why is the government aiming at privatization of BPCL when it is already profitable? So the government's argument has been that the time has come for the realization of maximum values on the shares of the Bharat Petroleum Corporation Limited. So the government argues that as more and more private firms enter the oil distribution market, the profitability of such companies which are operating in the oil sector will decline. And accordingly, the profitability of the Bharat Petroleum Corporation will also decline eventually. And as such, the share value of BPCL is likely to fall. So the argument of government is that as presently the value of shares of the BPCL is high because of less competition in the oil sector, the government is aiming at realization of maximum values on the shares of Bharat Petroleum Corporation Limited. However, again, this argument of the government is also flawed, and that is because even after the entry of private sector, public sector companies like the ONGC or the Oil and Natural Gas Corporation will continue to operate. And that is why this justification of the government does not hold necessarily true. And the final argument has been against the valuation of these public sector enterprises. So it is said that if the strategic sales of a public sector enterprises is carried out, that is, the government sells 100% of its stake, then the chances of getting the valuation right is lower, and that is mainly because there is no price discovery process in this kind of valuation. So simply when the government is selling 100% of its stake, the price discovery is not gradual. And that is why such a valuation can be flawed at times. However, if the disinvestment is done partially or the partial disinvestment is undertaken, then the governments get better chance of price discovery over a period of time. So the argument is that if the government starts partial disinvestment in public sector enterprises, the chances are that if these companies get listed on the stock exchange, their performance can improve. And accordingly, the government can realize better valuations in the subsequent disinvestments that it carries out. So that is why, as the partial disinvestment provides time to these public sector enterprises to become profitable, it can actually improve the valuation of such public sector enterprises. And as against this, if the valuation is done for a strategic sale, it can be flawed and the governments might realize that they did not reap highest profit from these public sector enterprises. And if you look at examples from other countries, a vast majority of privatization sales in the world over have happened through partial disinvestment in the stakes by the governments. And majority of the countries have not undertaken the strategic sales which is being carried out by the Government of India in the case of profit-making PSU, that is Bharat Petroleum Corporation Limited, which is also a Maharatna company. And as such, the authors have concluded that asset sales or strategic sales typically happen under distress conditions. And when governments are under severe fiscal stress, they want to raise the revenue quickly, and as such, this decision of the Government of India of privatizing BPCL or strategic sale of the BPCL reflects that the government is currently facing severe financial stress. So these were some of the arguments which were raised against the privatization of the Bharat Petroleum Corporation Limited. First is that it does not reflect the long-term agenda of the Government of India. That is mainly because the initial aim of disinvestment was partial investment and was aimed at making other loss-making PSUs profitable over a period of time by investing the resources which have been raised by the disinvestment or partial disinvestment of the PSUs. Second is that privatization does not necessarily lead to improved efficiencies or profits for these companies. And that is because many private companies or private sectors are not showing profitability, as can be witnessed in the telecom sector and the aviation sector. And finally, the authors have argued that the valuation process of such public sector enterprises is flawed because it does not necessarily lead to the best price discovery under such a sale or strategic sale. So these were few arguments which can be kept in mind from your mains examination point of view. With this, let's take up the next article. Now, this article on page number 10 highlights that the Black Money Act of 2015, which aimed at bringing back the black money which was stashed in the foreign countries, has failed to meet its main objective. And this Black Money Act of 2015 has failed because the problem of black money was misdiagnosed in the first place. So in this background, let us look at what is this Black Money Act and why was it passed in the first place and why has this act been a failure. So this can fall under General Studies paper 2 because it is a law. However, it can also be an important part for us from the General Studies paper 3 under the topic Economic Development. So let us look at the failure of performance of the Black Money Act in bringing back the black money which is stashed in the foreign countries. So first, let us look at what is this Black Money Act and why was it passed in the first place. So Black Money Act was passed in the year 2015 under an amnesty scheme. And this amnesty was provided to the Indian residents who were holding undisclosed assets or were earning undisclosed incomes in a foreign country. Now, in the form of this amnesty from the government, it provided a one-time opportunity to the Indian residents to disclose their undisclosed foreign incomes and assets. And for disclosure of such undisclosed foreign income and assets, these Indian residents had to pay a tax rate of about 30%. And besides this tax rate of 30%, they had to pay a penalty of 100% of the tax. Further, if the Indian residents were found to be willfully evading the taxation, these Indians would attract criminal prosecution with rigorous imprisonment from 3 to 10 years. Now, besides these provisions under the Black Money Act, the main aim was that it was to act as a precursor to the Automatic Information Exchange Agreement that India is signing with a number of countries. And presently, India has signed this Automatic Information Exchange Agreement with Switzerland, which is supposed to be the largest destination where the Indian black money is stashed presently. So under such Automatic Information Exchange Agreement, the countries involved can share the information on the incomes and the assets automatically. And once such information is shared, there can be penal measures with criminal prosecution under the Black Money Act. So these were the main objectives of the Black Money Act, which was passed in the year 2015. However, its functioning has shown that this act has not performed well. And accordingly, various failures have been witnessed in the functioning of this act. So first is the low performance of this act. And the total assets and the incomes that were disclosed under this act between the years 2016 to 2019 is estimated to be rupees 12,500 crore only. And this amount is very low as compared to other countries like Indonesia, where the disclosure has been up to rupees 25 lakh crores. The second argument is that this Black Money Act was driven by populism because there was a sentiment that a huge amount of black money from India has been stashed in foreign countries. And accordingly, the total estimated black money stashed outside India was exaggerated before the act was passed. And accordingly, the government created a harsh act in the form of Black Money Act of 2015. Now, according to the recent estimates of the National Institute of Financial Management, where it had reported to a Parliamentary Standing Committee on the black money, the estimates of the black money presently stands at $216 billion to $490 billion. And this estimate is only up to 1/7 of the estimates which were quoted ahead of the 2014 elections and the year before which the Black Money Act was created. So the present revelation of the National Institute of Financial Management states that the estimates of black money in that year were exaggerated. And that is why the new Act of 2015 has failed to yield results accordingly. Further, an argument is that the existing laws could have tackled the problem of black money. So there was no need of a new Black Money Act which was passed in the year 2015. So it has been argued that the Income Tax Act already has a provision for amnesty which was provided by the new Black Money Act of 2015. And also, this Income Tax Act has provisions of 3 times the penalty on the tax evaded, and it also has the criminal prosecution provisions with imprisonment up to 7 years in case of willful tax evasion. So these aspects of the Income Tax Act already had the provisions which were included under the Black Money Act, and as such, there was no need for a separate Black Money Act. And the final aspect is that this law is considered to be draconian in nature. And this is mainly because under the Income Tax Act, it was up to the assessing officer to determine the evasion and the undisclosed income. So in that case, the discretion of determining the level of tax evasion and undisclosed income was under the assessing officer. However, in this new act, the burden of proof has shifted to the taxpayers. And accordingly, this has created fears in the minds of the taxpayers. So there has been shift in the burden of proof on the taxpayers. Second aspect that proves that it is draconian is that this Black Money Act can be applied retrospectively. And as such, it provides unbridled powers to the tax authorities and which can be misused at times. Also, there has been low conviction rate in the cases related to black money. Now, for instance, the conviction rates of all the cases registered under the Enforcement Directorate is less than 1%. So this shows that the conviction rates under the Enforcement Directorate are very low. And also, the Income Tax Department's conviction rates are only around 2% in the year 2016 and 17. So this shows that the various cases of tax evasion which were registered by the Enforcement Directorate and the income tax departments had very low conviction rates. And this proves that there was no such necessity of a harsh act like the Black Money Act of 2015. So in this background, the author has argued that there is a need for increased international cooperation through tax exchange agreements like the one India has signed with Switzerland. Secondly, the government should also invest in technological advances like the blockchain-based asset management. And that can reduce the instances of tax evasion and creation of black money. And further, what is required is the increased banking penetration. This is because majority of the transactions are carried out in cash in various parts of the economy. And as such, that habit should be reduced and the dependency on banking should be increased. And one of the way in which this can be done is through increased banking penetration. So these were few aspects of the Black Money Act and how it has failed to achieve the desired results. With this, let's take up the next article. Now this article on page number 13 is related to the section 144 of the Criminal Procedure Code. And as we note that this section 144 has been imposed in various parts of the country following the protests against the Citizenship Amendment Act. So in this background, the article highlights that this section 144 is a legacy of the British laws. And accordingly, it analyzes the powers which has been provided to the magistrate under this act in case of assembly of people. So there are various aspects of this as to what is the maximum tenure for which this section 144 can be imposed, how can this section 144 be removed, and what is the criteria for imposing the section 144. However, in this article we'll look at what are the reasons for the criticism of invoking section 144 by the governments, and also what have been the past court rulings on the section 144. Now, although this is not very important for us from the exam point of view, what is important is the criticism for invocation of such section 144 and also the court rulings on this section 144 of the Criminal Procedure Code. So this shall form a part of the General Studies paper 2 under the topic governance. Now, regarding this section 144 of the Criminal Procedure Code, you should note that it can be imposed by a district magistrate, a subdivisional magistrate, or any other executive magistrate. And this can be invoked in an area in urgent cases of nuisance of apprehended danger, or if they believe immediate prevention or speedy remedy is desirable to control the situation. So such an order is passed when the magistrate considers that it is likely to prevent or it tends to prevent the obstruction, annoyance, or injury to any person lawfully employed. And it can also be imposed if there is danger to human life, health, or safety, or a disturbance of the public tranquility. And also it can be imposed in a riot-like situation. So all these aspects as to what can a magistrate do when a section 144 is imposed, what is the maximum tenure of this section 144, and how can this section 144 be removed are all provided in today's PDF. However, let us look at what are the reasons for the criticism of invoking section 144 by the governments. So the first argument is that it confers almost unbridled powers upon the executive officers. And secondly, it also takes away the people's fundamental right under the Article 19 of expression and protest against the government action and policies. Further, the only check which is placed upon the officer before passing any order under section 144 is whether or not it satisfied his or her conscience. And this particular loophole or ambiguity is exploited by the political executive because it is often eroded by the political demands which are made by the ruling government. So such orders are generally passed by the district magistrate when the ruling party directs the district magistrate to do so. And these are mainly aimed at curbing the freedom of expression of the public at large and also aimed at controlling the protests against the government policies and action, even when such protests are peaceful in nature. Another issue is related to the remedy against the wrongs that are done when the section 144 is imposed. So the immediate remedy against such an order is a revision application to the magistrate himself. And secondly, the aggrieved individual can approach high courts in such cases. And accordingly, a writ petition can be filed for the saving of fundamental rights. However, the fear is that before the high court intervenes, the right could have already been infringed. And as such a remedy might not be very helpful for the rights of the people. Also at times, this section of the CRPC has been imposed in the whole state. So for example, it was imposed in an entire state in UP. And accordingly, the criticism is that the security situation differs from area to area and such a blanket imposition should not be done. So the key criticisms are that it confers huge amount of discretionary powers upon the executive officers. Second is that it takes away the fundamental rights under Article 19 of freedom of expression and protest against the government actions. Third is that there is no check on the discretionary powers of the district magistrate or the executive who imposes this section 144. And finally, there is no proper remedy against the wrongs that are done when this section is imposed. So these are 4 or 5 criticisms that have been forwarded against the imposition of section 144 by the governments. Now in this background, let us look at some of the important observations of the Supreme Court in its various rulings on section 144. So the first major challenge to this section was in year 1961 in the Babulal Parathe versus State of Maharashtra and others. And in that case, the Supreme Court refused to strike down this section 144. And as such, the validity or the constitutional validity of the section 144 was upheld by the Supreme Court. Secondly, it was challenged by Dr. Ram Manohar Lohia in the year 1967. And once again, this challenge to the section 144 was rejected by the Supreme Court. And in this, the Supreme Court observed that no democracy can exist if the public order is freely allowed to be disturbed by a section of citizens. And we note that the section 144 is imposed when there is imminent danger to the public order or public law and order. Again, it was challenged in the year 1970 under the Madhu Limaye versus the SDM case. And in this, a 7-judge bench had provided the judgment. So in that case, the Supreme Court observed that the power of a magistrate under the section 144 is not an ordinary power. And such a power does not flow from the administrative powers that are conferred on the magistrate. However, these powers are judicial in nature. And as such, the decisions of the district magistrates under the section 144 or during the imposition of 144 are all subjected to judicial scrutiny. However, the court upheld that the section 144 is not unconstitutional in nature. And while justifying this section 144, the court ruled that the restrictions imposed through the section 144 cannot be held to be violative of the right to freedom of speech and expression under the Indian Constitution. And that is because the Article 19(2) of the Constitution provides for imposition of reasonable restrictions on the fundamental right of freedom and expression. And as such, the court observed that the law may be abused. However, that is no reason for striking down this law, which aims at controlling the law and order situation. So in short, the Supreme Court has refused to strike down the section 144 in its past judgments. However, the 1970 judgment provides for the judicial scrutiny of the decisions that are taken by the district magistrate under the section 144 or various actions that are undertaken when the section 144 is imposed. So this is a check and balance that has been imposed on the imposition of section 144. So these are few important aspects of the imposition of section 144 that are important for us from the exam point of view. So various other aspects of this section have been provided in today's PDF, so please go through them. With this, let's take up the next article. Now this article on page number 14 reads that the Sri Lanka will develop Mattala airport. And in this regard, the Sri Lanka has clarified that there are no discussions that are ongoing with India on this project of Mattala airport. Now earlier, India had shown its intention of jointly developing this Mattala airport along with the Sri Lankan government. And that was mainly aimed at countering the influence of Chinese presence in the Sri Lankan island. So in this background, what becomes important for us is the location of this Mattala airport because it is strategically important and is located close to the Hambantota port, which is being developed by China. And this will fall under General Studies paper 2 under the topic International Relations. Now regarding various strategically important locations that were in news in Sri Lanka, we have already discussed them in a DNS video. And they were in news because China was developing a highway in the Sri Lanka. So in this background, let us revise that DNS video and look at some of the strategically important locations in Sri Lanka which are of interest for India. And all these aspects can be important for us from the preliminary examination point of view. This news article on page number 17 reads that the Colombo to Kandy highway in Sri Lanka will be funded by China. Now we know that China is increasing its presence in the Indian Ocean. And this presence of China is seen in various initiatives in Sri Lanka and parts of Pakistan. For example, China has been developing the Gwadar port in Pakistan. Similarly, it has been developing the Hambantota port in Sri Lanka. So the increasing Chinese presence in the Indian Ocean has been termed as string of pearls theory. And a question has been asked based on the increasing presence of China in the Indian Ocean in the mains examination under the international relations. However, from preliminary examination point of view, the geographical locations are important for us. So let us look at the Chinese presence in the Sri Lankan island. And these locations will be important for us from the geographical locations of world. And regarding these geographical locations, you should generally note that only those locations are asked in preliminary examination which are in news in that year. So that is why these locations will be important for us. So here we will not discuss the India-China relations or the Chinese presence in Indian Ocean. However, we will only restrict our discussion to the geographical locations. Now regarding the location of Colombo to Kandy highway, you can see in the map of Sri Lanka. And you will find that Colombo lies on the western coast while Kandy lies in the southern central part of Sri Lanka. And this can be seen in the map here. Further, another important initiative of China in the Sri Lanka is the Hambantota port. And this port is strategically important from Indian Ocean's point of view. And regarding the importance of Hambantota port, you should note that it will serve ships traveling along the east-west shipping route. And the importance of Hambantota port is that it overlooks the Malacca Strait and the Suez Canal. So the important point here to be noted is that all the ships that pass through the east-west shipping route, which connects the Malacca Straits and the Suez Canal, are overlooked by the Hambantota port. Further, another important investment of China in Sri Lanka is the Mattala airport. Now here you should note that India is trying to acquire this Mattala airport, which is very close to the Hambantota port. And this effort of India is to counter the influence of China in the Sri Lanka and the Indian Ocean. So the locations of these three Chinese investments in Sri Lanka are important for us from preliminary examination point of view. And these include the Hambantota port, its strategic importance, the location of Mattala airport, and this airport becomes all the more important because India is trying to acquire this airport with an aim to counter the Chinese influence in Sri Lanka. And finally, the China is trying to fund the Colombo to Kandy highway in Sri Lanka. So all these aspects should be kept in mind. And with this, let us move on to the next article. Now this article on page number 15 reads that the RBI to conduct Operation Twist to manage yields on December 23. And further it reads that the Reserve Bank of India will simultaneously buy and sell the government securities worth rupees 10,000 crores each on December 23 under its open market operations. And this is a move aimed at managing the yields. Now in this article, what becomes important for us from the preliminary examination point of view is the term open market operations. And this can be important for us under the topic economic development. So accordingly, let us understand what is meant by this term open market operations, which is used by the RBI or the Reserve Bank of India. So simply the open market operations are the market operations conducted by the RBI. And RBI does so by the way of sale or purchase of the government securities to or from the market with an objective to adjust the rupee liquidity conditions in the market. So the important thing for us to understand is that the RBI conducts open market operations by the way of sale or purchase of the government securities. Now you should understand that the sale and purchase of government securities is different from the lending operations of the RBI. And the RBI lends to the scheduled banks by the way of liquidity adjustment facility, and you know that the RBI does so by the use of repo rate and the reverse repo rate. So the liquidity adjustment facility and the repo rate and reverse repo rate are the lending operations of RBI. However, the open market operations are the sale or purchase of government securities. So this is an important point for you from the prelims point of view. Now further, when the RBI feels that there is excess liquidity in the market, it resorts to the sale of securities. However, when the RBI feels that the liquidity conditions are tight or there is less liquidity in the market, the RBI resorts to the buying of securities. By buying the securities, the RBI infuses liquidity into the market, and by resorting to the sale of securities or the sale of government securities, the RBI sucks out the rupee liquidity from the market. So this is a monetary policy tool used by RBI to change the liquidity conditions in the market. So what is important for us from prelims point of view is that the RBI uses open market operations to adjust the liquidity conditions in the market. Further, the RBI does so by the way of sale or purchase of government securities. Secondly, when there is excess liquidity in the market, RBI resorts to the sale of securities. By this, the RBI tries to reduce the liquidity in the market. However, when there is lack of liquidity or there is less liquidity in the market, RBI buys security from the market, and by this, the RBI infuses liquidity into the market. Now let us try to solve the previous year questions asked by UPSC. Now the question asked in 2013 reads, in the context of Indian economy, the open market operations referred to. Now the option A reads, borrowing by scheduled banks from the RBI. Now this option is incorrect because as we have learned that the lending operations are considered under the liquidity adjustment facility and RBI uses the repo rate and reverse repo rate for the borrowing operations. Second is the lending by commercial banks to industry and trade. Now this is outrightly a wrong option. The third option reads, or the C option reads, purchase and sale of government securities by the RBI. Now this option is correct because under the open market operations, RBI conducts the purchase and sale of government security. So the correct answer in this case is C. Further, the question asked in 2015 reads, with reference to Indian economy, consider the following. The first is the bank rate, the second is the open market operations, the third is the public debt, and the fourth is the public revenue. Now the question reads, which of the above is or are a component or components of the monetary policy? Now we know that the bank rate and open market operations are a part of monetary policy. However, the public debt and public revenue are part of the fiscal policy, and we know that fiscal policy is dealt by the government. However, the monetary policy is taken care of by the RBI. So the correct answer in this case is 1 and 2, that is C, which means that bank rate and open market operations are components of monetary policy and not the public debt and public revenue. Now after today's discussion, let us take up these two practice questions and the answer for them will be displayed after 5 seconds. The first question reads, Mattala airport sometimes in news is located in which of the following countries? So as we have learned, it is located in Sri Lanka. So the correct answer is C. Second question reads, which of the following statements is or are correct about the open market operations of the RBI? First is that it does not have any impact on the liquidity, which is incorrect because it is aimed at changing the liquidity scenario in the markets by RBI. Second is that it involves lending and borrowing under the liquidity adjustment facility of the RBI, which is also incorrect because it involves outright buying and selling of the bonds. Thus, it does not involve any lending or borrowing by the RBI. So the correct answer here is D, neither one nor two. With this, we conclude our discussion. Now let's take up the question for the day.